Friday, May 8th, 3:06 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Finishing up another week here. A little update. So I'll look at multiple time frames, some trade ideas that occurred the past few days, and some new trade ideas that might be occurring right now for me to place a trade before the close of business today to hold over the weekend. Next week, it's not canceled, it's still scheduled. May 14th through the 15th, President Trump trip to China for a summit with the president of China. That's mainland China. There's going to be a lot of disturbance in the markets leading up to that. Press releases, misinformation, potentially from politicians. Do due diligence before you make a investment decision on some financial instruments that will correlate to the summit. Look here at the daily chart on the futures. All-time new high, the ES. Massive run-up. The 10-year yield, inside candle. Yep. So massive consolidation here. Inside candle. Again, last week, the Federal Reserve met. And we still haven't broken out of that last week's trading range. Interesting. The probability is this year, the Fed does not lower interest rates. That's what the market sentiment is. It's also election year. History shows they typically don't want to raise interest rates into an election. That's the United States general election in November. As well as mixed signals in the economy is that lowering interest rates with the current situation in the markets, the economy, the broad markets, would be negative and hurt the U.S. economy by lowering rates right now. Also could devastate the dollar. Yep. And that does not fix the real estate market, okay? Lowering interest rates does not fix the real estate market. Supply and demand, plus the embedded costs, building materials, labor, insurance, permits. So much misinformation people are intentionally talking out there. And if you're going to say it's going to make the homes affordable, again, lower interest rates do not make the sale price lower. So if you can't afford the price now, and if the price interest a little bit lower, it still doesn't necessarily mean you're going to find a house that you could afford the mortgage payment on. So here's the US dollar, just like the US Treasury 10-year. Inside candle last week and this week, back to back. A lot of stuff building energy into this summit next week. Here's the high of the year, the US dollar. Consolidation, breakdown, consolidation. Again, the momentum is down for the US dollar. Back here, the 10-year yield. We're forming a U-shaped pattern here. Crude oil. I bought more this week, and I still have positions from last week. These are bullish positions using options. I have gains in them all. Those gains won't be profits until I close them for profits. Last week, bullish pin bar. That prior week, huge wick on the bottom. Buyers are buying here on the dips of crude oil, and that's what I've been doing. So we did break the high. Sorry, these are daily candles, sorry. So that yesterday, bullish pin bar and that red candle. And today, we broke the high of yesterday. Buyers buying here, building this big wedge. Gold. I bought positions last week, and I closed them a few days ago for profits. Look at gold. Here's the high for the year. We're still trending down. Now we're in this big consolidation. See this big move up, that big green candle? I closed my bullish positions there and took gains. Thank goodness. I took profits, not gains. Sorry, I had gains, closed them and took profits. Then we formed that bearish pin bar. I have not gone short yet, but I'm leaning to look for bearish trades on the higher. So if we go up a little bit higher on weakness, I'll be looking to trade bearish. You heard me right, bearish on gold. If we go up higher on weakness, I would hate to put a trade on here, a bearish trade, and then have it short squeeze and take me out. So the worst case scenario is it goes higher on weakness and then has a fast sell-off and I miss the trade. But I wouldn't lose money. Got it. And then down here, a sweet spot. I'll be looking for a bullish trade. But here again, it's a huge consolidation. After doing this huge sell-off. So again, we had a huge decline here, a natural retracement, and rejection up here. Again, that's a pattern I'm looking at. That's a bearish pattern. The euro, the inverse of the dollar. Yep, big consolidation down here off the lows of the year. Breakout to the upside consolidation, showing more signs of bullishness. I did do a day trade today on the euro. I think it was around 10 a.m. Fast move, small little profit, happy camper. So not always get trades, but I took it. Yeah, that was nice. Natural gas. I bought more positions. I'm bullish positions. I bought more yesterday. I have a bunch of them already, but I liked it how it priced a few days ago on the charts. So I added it. Yep, added more bullish natural gas positions yesterday. Here we are, consolidation. Here's the lows of the year. Big consolidation. Move up. Sat on hands. So again, we have this consolidation here. Strong move up, broke above. I'm not buying these highs. Had that retracement in this imbalanced area. That's where I took the trade yesterday here. Nice. So energy, crude oil, natural gas, I have bullish positions on. Swing trades. Silver, a little bit stronger than gold here. Inside candle for the day. Retracing that bearish pin bar. And crypto. So notice these consolidations. The high and the low is how much price action occurred. Left and right, how long it took there. It's getting less trading range here from the highs and lows, and less duration. It's getting weaker as it goes up. Opportunities to look for bearish setups. History. Crypto. Do you know any financial mortgages in the United States that let you pay your mortgage with crypto? Do you know any insurance companies in the United States that are licensed that let you pay with crypto? Do you know any utility companies in the United States that let you pay crypto? I don't. The most of them, if any, I don't know. So again, the value of crypto, the business model of it, certainly never reached the level that was pumped up to be. Penny stocks, if you know the history of those, a lot of pump dump, just like crypto, a lot of pump and dump. That does not mean you can't make money trading it, nor was it going to have earnings reports. Yep. I would take this down to the final intraday on the 4-hour chart. Same financial assets, but intraday. 30 days on the ES. Again, this white vertical line, that was the last Wednesday FOMC meeting. And we gone higher since then. So I'm not looking to trade bearish up here yet. Nope, I'm looking buying the dips. Again, we broke key level up here. We never tested these. So again, another reason I never took trades in these today. Never pulled back to where I was looking. 10-year yield. Again, here's that white horizontal line. Sorry, white vertical line, FOMC meeting. We've gone below it and above it. Huge consolidation. some key levels I have labeled here. And neither one got tested again, sitting on hands. Well, this one got tested, but I wasn't around to take a trade. I still got time, about 44 minutes before the market closes. So I might consider putting a bullish trade on the 10-year yield using options. And the US dollar. So here that vertical line again, the FOMC meeting, and look what happened. Ran it up a little bit after and declined into this key demand zone, this green area. One time, two times, coming back in it again. And we broke these key levels here. Broke this one. Both of these got broken today. So this is the place I'll be looking possibly for a short. Yep. On the 4-hour chart, things would change, of course, on the other chart timeframes. But here, if we get a bounce in here on weakness, I might be looking to trade short. And let's update these. There we go. Let's take it to the next financial instrument. Crude oil. Yep, nice. That was a big, strong move here in that green 4-hour candle yesterday. So I went bullish. See this bullish pin bar? I went bullish that day after that got done. And I was expecting, yeah, we might have a retest somewhere here. That's why I labeled that midpoint, that gray area. And also labeled some areas on the upside. And that's what happened. You pull back, retest it. I was already in the trade. I'm still in the trade. Could have sat on my hands and waited for a pullback. But if it never did pull back, well, then I missed the opportunity to get in the trade where I was bullish. If I was bullish after this form, so I could have added more positions yesterday down here, but I'm already heavy in energy. I don't want to add any more to it. So that was a sweet spot. Nice, strong reversal for someone to take that trade. And here, right here, key level. Nice to take a trade right now. Adding more. Or, yeah, first time if you're there. Gold. Again, so here's that FOMC meeting. Vertical line. A lot of chop down here. And then the run up. Again, it's Friday. Often people either buys direction or hedging. They want to hold gold over the weekend, especially with this geopolitical event and also the summit coming to China next week. Yeah, so maybe they're pumping up in here. And that's where I might be looking for a bearish trade idea. Again, I'll look at multiple time frames. The euro. Yeah, huge consolidation in here. Natural gas. Again, yesterday that was a nice move here. Nice imbalanced area. It came down, tested, and short squeeze took off nice. But it went higher overnight. So again, I'm good. I'm in my bullish positions. It's at a key level right now. Opportunity to take a nice trade. For swing trade. Again, the silver. And we'll finish this off. Here we are. The 4-hour chart and crypto Bitcoin. Wow. Interesting. Not impressive. Nope. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching. Thank you kindly for your support.